Hello students, welcome back to Accounting 1304, Introduction to Accounting 2. We are using the textbook College Accounting 24th edition, and the problem that we are going to be covering in today's lecture is problem 11-11A. Problem 11-11A will be on your exam, and it deals with purchases and cash payments transactions, as well as preparing a schedule of accounts payable. I warn you, this is a long problem. Okay, but it basically encompasses everything from the chapter. So it summarizes everything that you have to basically understand dealing with purchases and cash payments transactions. We're going to tackle it piece by piece. Do not get discouraged. Now, a lot of the stuff that we're going to be doing in this problem has previously been covered in Introduction to Accounting 1, such as doing journal entries, posting to your ledgers. Okay, so the process of preparing a journal and preparing a general ledger, you should already be familiar with. The only thing that we're doing different here is that we are updating or using new accounts that we had not been exposed to. Okay, so this is the problem. Okay, it's massive, it's very long. Okay, so we have Emily Watson owns a small retail business called Watson's Furnishing. The cash account has a balance of $21,000 on July the 1st. The following transactions occurred during July, and then we have a whole bunch of transactions. Okay, we are required to enter the transactions starting with page 16 of a general journal, post from the journal to the ledger and accounts payable ledger accounts, use general ledger account numbers as shown in the chapter, and we're going to prepare a schedule of accounts payable as of the end of July. And we have to verify that the accounts payable account balance in the general ledger agrees with the schedule of accounts payable. Okay, so I've already set up the whole problem out. I've got my journal. We're going to be using two journals, page 16 and page 17. Okay, so we're going to have 2 pages of journals. I've also set up all of the general ledgers that we are provided with in the chapter. So I've already used the names and the account numbers provided in the text. So I've already created all that for us as well, all of the accounts that we are going to be using. And I have also created the accounts payable ledger, which is basically all of the customers that we are making purchases from. Okay, these are all the people that we're making purchases from. So I've already created the schedule as well. And then last but not least, we are going to prepare the schedule of accounts payable. So we have to work in order. First we do the journal, then we do the general ledger, then we do the accounts payable ledger, and then we do the schedule of accounts payable. Okay, so are we ready to tackle this? Okay, now I'm not going to spend much time reviewing the information from the chapter. That is on you. You all need to read the chapter before you begin working on the problem. Now, like in lecture from chapter 10, I indicated a figure. Chapter 11 also has a figure that deals with purchases. So last week, or when we covered chapter 10, we covered sales returns and allowances, and cash receipts. So we had the new sales accounts that were going to be used. We are transitioning into purchases and cash payments. So these are the different accounts that are new that we're going to be using, and they all fall under the expense section of the owner's equity section of the accounting equation. Okay, so we're going to have purchases, returns and allowances, purchases, discounts, and freight in. Purchases will be debited. Purchases, returns, and allowances will be credited. It's a contra expense account. Purchases, discounts will also be credited because those decrease the amount of your purchase amount. And then the freight will be debited. Okay, so it's important. I always tell you, I don't expect you to memorize the textbook, but do have information such as figure 11-7 handy at all times as you're working your problem. That way it just makes it easier to understand, should I be debiting or should I be crediting? Now your textbook does an awesome job in explaining each of the accounts. You need to go back into your book and read those sections, but this is basically just a quick overview. For purchases, we are going to debit to enter the cost of the merchandise purchase. So when we make a purchase of goods, we are going to be debiting the purchases account. How much did we spend on that purchase? It's an expense account, we debit. Purchases, returns, and allowances, we're going to be crediting for the amount of the returns and allowances. If there's any returns and allowances, we're going to credit the account. Purchases discounts is going to be credited, and then our freight, this is to enter any transportation charges on the merchandise purchase. So if we make a purchase and it gets shipped, we have to incur the shipping costs. That would be a debit to the freight in account. Okay. Like I stated, we are going to be posting to your general journal and your general ledger. Students struggle or tend to struggle when they are transferring the information from the journal to the ledgers. Your textbook provides you with a summary, step by step, of what is it that you need to do. Please go back and review that in detail. And it also shows you on figure 11-10 how the information flows from your journal to the respective general ledgers. So if you follow the diagram, it will show you where the information from the journal feeds into the specific ledgers. Your post reference, remember, is the journal page number. So your post reference on the ledger is your journal page number. Your post reference on the journal is the account number that you're posting it to. Remember, every account has an account number. You're going to be entering it on your journal as you transfer the information from your journal to your ledger. Okay? So, there is a wealth of information in the chapter. Great examples are included. Please make sure that you read the entire chapter before you attempt the problem. Okay. Now, in this problem, I am going to go a little bit fast paced because the problem is long. Okay. I cannot be explaining in detail every single transaction, and a lot of these transactions are repetitive. It's just a different purchase from a different vendor. Okay. So, let's begin. So, we have the series of events that occurred, and we have to record them. So let's start off with July the 1st. Okay. We issued a check number 414 in payment of July rent, $2,500. So what are we paying? The rent. So I'm going to go ahead and I'm going to debit my rent expense for $2,500. And how do I pay the rent? I pay the rent with cash. Okay. So rent expense gets debited, cash gets credited, $2,500, and my description is going to be check number 414, July rent. Okay. So remember, debits must always equal credits, and also remember that the debits always go on top, the credits go on the bottom. Okay. So that happened, let me not merge it. So that happened on July the 1st, okay? On July the 1st, we also purchased merchandise on account from Tilly's Pillows. Invoice number 311 for $2,800, terms 210, net 30. So what does this mean? So this means that we purchased merchandise from Tilly's Pillows, okay, on account, which means we're going to pay them later. Now, Tilly's Pillows says if you pay me within 10 days, you get a 2% discount, okay? So we are incentivized to pay within the 10 days so we can get a 2% discount. If we don't take advantage of the discount, then the balance due is within 30 days, no discount given, okay? So let's record the purchase. We bought merchandise from Tilly's Pillows. So what happened here? We had a purchase. So we have purchases of $2,800. Okay? And we made the purchase on account. If it's on account, that means I owe money. So it's going to be my accounts payable. I owe money to who? To Tilly's Pillows. Okay? Accounts payable is a liability account. So if you look over here, liabilities have a normal balance of a credit, okay? So make sure that you know how to read this. Liabilities, wherever the positive sign is at, that is the normal balance of the account. So liabilities have a normal balance of a credit, okay? So $2,800, okay? And this is for invoice 311, okay? So we have to pay that invoice at a future point in time. Okay, so what happened on July the 3rd? On July the 3rd, we purchased more merchandise on account, but this time from Shear and Company. Invoice number 812, $3,300, and the terms are 110, net 30. So from this purchase, we get a 1% discount if we pay within 10 days. If not, the balance is due in 30 days. So what happened? It's the same one as above. We have a purchase. Purchases is going to be debited for the total of $3,300. And we're going to have accounts payable. But this time it's for Shear and Company. Okay. For $3,300. Okay. So if you see these two entries are the same, it's just a different dollar amount and a different vendor. This one's Tilly's, this one's Shear. Okay. And this is invoice number 812. Okay. So that happened on July the 3rd. On July the 5th, return merchandise purchase from Tilly's Pillows receiving a credit memo on the amount owed, $300. So what happened on the 5th? We made a return of $300 worth of merchandise. So we're returning it for whatever reason. Okay. So what's going to happen? They're telling us we received a credit memo, which basically means that they reduced the amount that we owed them. Okay. So if we look over here on Tilly's Pillows, we had a credit accounts payable balance of $2,800. Now we need to reduce that amount because we no longer owe those $300. So we're going to go ahead on July the 5th. Okay. We're going to go ahead and we're going to debit accounts payable to offset the return. And this is for Tilly's Pillows. Okay. And the return is for $300. Okay. And then the account that we're going to offset it against is purchases, returns, and allowances. $300. And that account, we can see it here, purchases, returns, and allowances. And you credit it for any returns made or allowances made. Okay. So that happened. This is for returned merchandise. Okay. So let's continue. On the 8th, we purchased merchandise on account from Donna's Lamps, invoice number 139, $2,900, terms 210, net 30. So Donna's Lamps is offering a 2% discount if we pay within 10 days. Okay, so let's do July the 8th. We made a purchase on account. So if it's on account, okay, what are we going to do if it's on account? Well, first of all, what did we do? We made a purchase. So we have purchases for $2,900. Okay. And then we purchase on account. That's going to be your accounts payable. And this transaction is for Donna's lamps. And this is invoice number 139. Okay, so that happened on the 8th. On the 11th, okay, we issued check number 415, okay, to Tilly's Pillows for merchandise purchase on account less the return and less a 2% discount. So this is happening on July the 11th. So on July the 11th, we are going to pay what we owe to Tilly's Pillows. Okay, so I'm going to highlight here anything for Tilly's Pillows. Okay, we have Tilly's Pillows there, and then we have Tilly's Pillows here. Okay, so how much money do we owe Tilly's Pillows? Well, let's get our calculator out. On the 1st, we made a purchase of $2,800 that we owed. And then on the 5th, we have a return of $300. So that means that we owe $2,500. That's how much I have sitting on my accounts payable. Okay, so I need to clear that accounts payable for the $2,500. So if you see here, accounts payable for Tilly is $2,800 credit. 28 credit minus 300 debit gives me a $2,500 credit. Remember, accounts payable always has a credit balance. Okay, so your balance is on the credit side. So if I have a credit balance, then to clear my credit balance means I need to debit it. Okay, so I'm going to go ahead and I'm going to debit accounts payable for Tilly's Pillows. Okay, for $2,500. Okay. Now what else happened? Well, we need to figure out how much the discount was, okay? Because it says there on the 11th that there's a 2% discount, okay? So, discounts, okay? Discounts get credited. So if you see here on figure 11.7, discounts get credited, okay? So let's go ahead and let's do purchase discounts. Okay? So, the balance that we owe is $2,500, and we are going to get a 2% discount per the problem, okay? So that means that we're going to get a $50 discount, okay? Remember, $50 credit because that is the normal balance of the account. So, if we used to owe $2,500, but we get a $50 discount for paying within the 10 days, then how much cash do we actually have to remit to Tilly's? Well, that means that we owed $2,500, but we got a discount of $50. That means that the cash that we're going to pay Tilly is $2,450. Okay? Remember, debits must always equal credits. So here I have one debit for $2,500. I've got two credits that total the $2,500. Okay? So that happened on the 11th. Okay? On the 13th, we issued check number 416 to Shear and Company for merchandise purchase on account less a 1% discount. So now we're paying Share. Okay, and I'm going to remove this highlighting because I'm going to be doing some highlighting later on. Okay, so on the 13th, we are issuing check number 15. Okay, and let me put a description on this one. Payment. Check number, which one do we do? Check number 415. Okay. So let's do July the 13th. Okay. So we issued check number 416 to Shear and Company. Okay. To Shear and Company. So let's go find Shear and Company. We have it right there. How much do we owe Shear and Company? We owe $3,300. Okay. So we need to clear that $3,300. Remember, accounts payable has a credit balance of $3,300. So to clear it, I would need to do the opposite, which is to debit the accounts payable for Shear. Okay? Accounts payable, Shear and Company. Okay? Let me abbreviate. That way it fits. Okay, there we go. Accounts payable, Shear and Company. Okay, so let me abbreviate this one over here. There we go. Just so it can fit. Okay, so we owe $3,300. Okay, so we know that we're going to clear those $3,300. We're going to clear them out. Okay, now the problem says that there is a discount of 1%. So if we look back at Shear and Company, it says here 1% discount, 1-10 net 30. So we get a 1% discount. So let's go ahead and let's do our purchases discount. Okay. And we have a purchases discount of 1%. So we're going to get our magical calculators. 3,300 times 1%. That's going to give me a discount of $33. Okay. So now how much cash am I going to pay? Okay. So the cash that I'm going to pay is I owe $3,300. I got a discount of $33. That means I owe in cash $3,267. And this is payment for check number 416. Okay. And then last but not least, we have their last transaction. We have on the 15th, we returned merchandise purchased from Donna's Lamps, receiving a credit memo in the amount of $350. So now Donna's Lamps had made a purchase we made a purchase from Donna's Lamps for $2,900, and now we are returning $350 back to Donna's Lamps. Okay, we returned some merchandise. This is happening on July the 15th. So we are making a return. So that means that we are going to offset it against my payable because we have not paid Donna's Lamps. Okay, so we're going to receive a credit for that. So we're going to go ahead and we're going to debit our accounts payable. payable for Donna's lamps, okay? And the amount of the return is $350, okay? And then I'm going to go ahead and I'm going to credit my purchases, returns, and allowances. Okay? For $350. Okay? And here we returned merchandise. Okay? So those are the transactions all the way through the 15th. We're going to continue with the rest from the 18th through the 29th on page 17 of the journal. Okay? So we're going to need a new journal page number. So let's see what happened on the 18th. Okay? July the 18th. Okay? So July the 18th, we issued check number 417 to Donna's Lamps for merchandise purchase on account less the return on July the 15th. So let's locate everything that has Donna's Lamps right there. And here I forgot to put the 2900. There we go. Okay. So we have Donna's Lamps right there. Okay. So we have a purchase of $2,900 that we made, and then we returned $350. Okay. So those are the two transactions affecting Donna's Lamps. Okay. So in transaction on the 18th, we are making a payment for what we owe less a 2% discount. Okay. So we made a purchase of $2,900 from Donna's Lamps. Then we returned $350. That means that we owe Donna's Lamps $2,550. That is the amount that I have to clear from my payable because I want to make sure I zero out my balance that I owe Donna. Okay, I want to show that the current balance that I have, which is $2,550, is zeroed out. So currently I have a credit balance of $2,550. To zero it out, I need to debit my balance. It's going to be accounts payable, Donna's Lamps. The amount of the debit is $2,550. Okay. Now we have a discount, a purchases discount. So the amount that is owed is $2,550, and the discount, according to the problem, is 2%. Okay. So we're going to multiply it by 2. And that's going to give me a $51 discount. The discount will be credited. Okay. And then now we can figure out how much cash I have to pay. Okay. So I owed $2,550, but then I got a discount of $51 for paying early or paying within the 10-day mark. So that means that I am going to pay in cash $24.99. So this is payment with check number 417. So that happened on the 18th. On the 25th, you purchased merchandise on account from Applied Interior Design, invoice number 489 for $2,650. There is no discount. It's just terms and 30. Okay. So this is happening on July the 25th. We made a purchase on account. So what happened? Well, we have purchases. Purchases of how much? The problem says that we purchased $2,650. Okay. How did I pay for that purchase? On account. So that means it's going to be my accounts payable for Applied Interior. Okay, $2,650. Okay. And then this is happening on the 25th. This is for invoice number 489. Okay, here we go. So that happened on the July the 25th. On July the 26th, you purchased merchandise on account from Tilly's Pillows again. Invoice number 375 for $2,180. Terms 210, net 30. Okay, so we have another purchase on account from Tilly's Pillows. So we're going to debit my purchases. Anytime you buy any goods from anybody, it's going to be a debit to purchases for the $2,180. How did you pay for that purchase? So you have basically two options. You pay with cash or you pay it on account, which is your accounts payable. In this case, most of our purchases are on account. So I'm going to debit my accounts payable. Tilly's Pillows. And make sure you put the name of the vendor. That way we can keep track of how much we owe each of those vendors. Okay. And this is invoice number, what number is it? Invoice 375. Okay. And then last but not least, on July the 29th, we have another purchase. We purchased merchandise on account from Shear and Company, invoice number 883 for $35.60, terms 110, net 30. So we have another purchases of $35.60. Okay. And the purchase is on account, so we're going to use accounts payable. This is for Shear and Company for $35.60. And this is for invoice number 883. Okay. So these are all of my transactions. Before you move on, make sure that you didn't miss anything, that you have your debits and credits. You don't want to miss anything. And we're good there. And I'm going to go ahead and I'm going to unhighlight this because we're going to be doing some highlighting in a minute. Okay. So make sure that your debits equal your credits at all time. Okay. So we are done with the journal. Okay. Now comes the fun part, which is transferring all of this information from your journal to your ledger. Now, I don't know about you, but I'm a little bit of old school. I cannot be going back and forth. I get dizzy and I get confused. Okay. So I like to print out my information and I like to mark it off, scratch it off on paper. Okay. But that is just me. You cannot miss any transactions because that is the issue that most students have. They go all over the place. They don't organize their transactions in sequential date order, and then they're out of balance because they miss a transaction here, they miss a transaction there. Okay, so I'm going to show you how I do the general ledger information. Okay, I tackle one account at a time. Okay, I don't try to go all over the place. So let's start off with cash. Okay, I highlight everything that affects cash. Okay, so I'm going to go through my journal and I am going to highlight everything that has the cash account. Okay, so I've got 3 transactions so far, and then I've got 4 transactions, and that is it. 4 transactions. Okay, so for cash, the problem tells you on the beginning in the first sentence here, or in the second sentence, the cash account has a balance of $21,000 on July the 1st. Make sure you do not forget the beginning balance. Let me see if I have, yes, I put that one there. Oh no, not there. The check mark goes under your post reference because that is your beginning balance. Okay. Okay, let me just center it. Okay, and then we have a beginning balance of 21,000. Now, cash is an asset account, so cash is an asset. My normal balance is on the debit side. Okay, so my balance will be sitting on the debit side. Now, let's quickly go over a ledger. Okay, so you've got your date. You're going to bring in the date when the transaction posted. So this amount right here is just your beginning balance that was given to you. So usually when you have a beginning balance, you put a check mark on your post reference indicating this is a beginning balance. This is your balance, your starting point. Okay. After that, you're going to carry in all of your transactions during the month. Okay. So we're going to go one by one. So we're going to tackle July the 1st. Okay. We're looking at this entry right here, and we have a credit of $2,500. Okay. Now, this is a cash account. So I'm going to put here, for a cash account, a debit increases, a credit decreases. Okay. That's what happens. So because it's an asset account, all of your asset accounts, this is going to apply. A debit increases and a credit decreases. And am I just guessing? No, I am not. You go here to your figure 11-7 and you'll find it here. A debit increases and a credit decreases for assets. Okay, we're looking at the assets right now. Okay, so let's continue. So because it's a credit, I am going to subtract. So I am going to get my beginning balance of $21,000 and I'm going to subtract $2,500. So my updated balance is still a debit of $18,500. Okay, so that happened on July the 1st. Then we're going to go to July 11th. Okay. Now, I forgot one thing. On the post reference for that July 1st, we have to put where did we get that information, and we are getting it from journal. Let me delete this. Let me go back so we can finish this line item. So once you bring it in on your post reference, you're going to put where did you get this information from. I got it from journal 16. Okay, that is where I got it from journal page 16. Okay, now once you post it here, you're going to go back to your journal. Okay, you're going to put the account number that you posted it to. So cash is account number 101. So I'm going to go ahead and I'm going to put the 101 there. Okay, so that way I know that I posted this cash transaction on account number 101, which is right here. Okay, now we can move on to the next one, July 11. Okay, July 11 is on journal 16, still the same page number. And we have a credit of $24.50. Okay, because it's a credit, I am going to subtract. My balance is $18,500. I'm going to subtract the $24.50. My new balance is $16,050 debit. Okay. So you see the balance is always maintained on the debit side. That means that you still have $16,050 to spend. Once the balance goes to the credit side for cash, it means that you have overdrawn your account and you don't want to do that, okay? So we went ahead and we posted the transaction. I am going to go back to my journal and I'm going to enter the account number 101. Okay, don't forget to do that step because then you get points deducted. And then we're going to go to July the 13th. We are still in journal 16 and we have a credit of $32.67. Okay, so I'm going to go a little bit faster here so I can finish filling out the ledgers. $16.50 minus $32.67 gives me $12,783. Okay. And then last but not least, we have one journal. Okay, we need to go back and we're going to put 101 here. And then last but not least, we've got one journal, one transaction in page 17. This is happening on July the 18th. This is journal 17. Okay, and the entry is for $24.99 credit. Okay, so we're going to go ahead and we're going to get the $12,783 minus the $24.99. That's going to give me an ending balance of cash of $10,284. Okay, I'm going to go back to my journal and I'm going to enter account number 101. Okay, so we've got 4 cash account entries that we have used up. Okay, and this is my ending balance, $10,284. Okay, what's going on? Let me highlight it. There we go. Okay, so we're going to repeat the same step, but now for accounts payable. We're going to locate anything that has accounts payable on it, and it does not matter whose accounts payable it is, what company, as long as it's an accounts payable. Okay, so we're going to have quite a bit of transactions. Okay, all of these have accounts or are affected because they are an accounts payable account. Okay, so we have quite a bit of entries. So locate them, highlight them, mark them, whatever works for you. Okay, so we have a lot to post to my accounts payable balance. Now, accounts payable, we were not provided with a beginning balance, so we're going to start off with our July 1st entry. Okay, so we have July the 1st. Okay, and we have journal page 16. The amount that we have is a credit of $2,800. Okay, so my ending balance will be 28 credit. Now, accounts payable, let's look at our figure 11-7, accounts payable is a liability. A debit decreases, a credit increases. So let's go ahead and put that here. A debit decreases and a credit increases. Okay, so when you have a debit, you subtract. When you have a credit, you add. And this impacts all of your liability accounts, which we only have one, which is your accounts payable. So before you begin doing this, make sure you identify what the debit does. Does it increase it or decrease it? And where do you get that information from? From your T accounts, from figure 11-7. It'll show you what you need to do. Liabilities, debit decreases it, credit increases. Okay, so we've got a credit of 2,800, credit 2,800. I'm going to go back and I'm going to enter account number 202 on my journal. Okay, and that shows me that I've posted that transaction. Okay, now we're going to go to July the 3rd, journal 16, and we have another credit of 3,300. So if it's a credit, we say we added it. So we have 2,800 credit plus 3,300 credit. My balance is 6,100 credit. Okay, so that happened on the 3rd. I'm going to go back and I'm going to enter account number 202. Okay, then we're going to go to July the 5th, still in journal 16, and July the 5th we have a debit of $300. Okay, so we have a debit of 300, so that means I'm going to get my ending balance of 6,100 credit, and I'm going to subtract 300. That leaves me with a credit balance of $5,800. So the balance is still a credit balance, okay? So it'll be 5,800 credit, okay? Now I'm going to go back and I'm going to enter account number 202. We're going to move on to July the 8th, okay? July the 8th is journal 16, okay? And we have a credit of $2,900. So we have a credit of $2,900. Okay. So we're going to go ahead and we're going to get our credit balance of $5,800 plus $2,900. That will give me a credit balance of $8,700. Remember, your balance should always be on the credit side for liabilities. Okay. And then I go back and then I enter 202. Okay. And then we go on to July 11. Okay. Journal 16. And July 11, I've got a debit of $2,500. So if it's a debit, I am going to subtract. So I've got 8,700 credit minus 2,500. My ending balance will still be 6,200 credit. Okay. And then I'm going to go back to the 11th and I'm going to enter account number 202. Then we're going to go to the 13, July 13. It's journal 16. And we have a debit of $3,300. Okay. So we have a debit of $3,300. So I've got 6,200 credit minus 3,300. Now I have a $2,900 credit balance. So what does this mean on accounts payable? It means that our balance is, we start off with 2,800. It grew, and then it's going down because we're making payments to those vendors. Okay. So that happened. We're going to go back and we're going to put 202. Okay, let's look at July the 15th. That's the last transaction on journal 16. And we have a debit of $350. Okay. So we're going to get our calculator. We've got 2,900 credit minus the debit of $350. That will give me a balance of $2,550 credit. Okay. And then I'm going to go back and I'm going to put account number 202. Now we're going to move on to journals on page 17. Okay. On July the 18th, we've got journal 17. Okay. And I've got a debit of $2,550. Okay. So I've got a credit of, sorry about that. So where's my calculator? Right here. So I've got a credit of $2,550 and then I've got a debit of $2,550. So my balance at this point is 0. Okay. On the 18th, I'm going to go in and I'm going to put my account number, which is 202. Okay. Then on the 25th, I have a credit of $26.50. Okay. So, July 25th, Journal 17. I've got a credit of $26.50. So now my balance will rise up to $26.50. Okay, that happened on the 25th. On the 26th, I've got another credit of $21.80. So let's put that in. July 26th, Journal 17. And we've got a credit of $21.80. So because they're credits, we're going to add them together. $26.50 plus $21.80, that's $48.30. Credit. Okay, we're going to put the 202 over here. That happened on the 25th. That happened on the 26th. Now we have one last transaction, which happened on the 29th. We have a credit of $35.60. Okay, so that happened on July the 29th. This is Journal 17. And we have a credit of $35.60. So that means that I have a credit of $48.30 plus $35.60. So that means that I closed the month owing $8,390. This is how much money is owed to our different vendors. Now, if you can see here, it just gives us a summary of how much money is owed. But I don't know how much I owe Tilly's, Donna, Shear. I don't know how much I owe anybody. I just know that I owe a total of $8,390. And later on, we're going to figure out how those $8,390 are distributed amongst the different vendors. Okay? So now we're going to go and we're going to continue with purchases. We're going to locate any account that deals with purchases. And I'm going to choose another color. Okay? Let's do green for purchases. Okay? So I've got 2, 3 transactions right there. 3, 4 transactions, 5 transactions, 6 transactions for purchases. So this tells me how much I spent on making purchases of merchandise this specific month. Okay, so let's bring in our accounts. Let's start off from the top. So we have July the 1st. Okay, this is Journal 16. And for purchases, we have a debit of $2,800. Now let's look at purchases. Okay, purchases falls under the expenses. A debit increases, a credit decreases. So let's put it over here. Purchases. Okay. A debit increases and a credit decreases. Okay. Make sure you always follow your accounting equation. Okay. So, for purchases, the balance will always be on the debit side, okay? So, let's put that balance on the debit side, okay? So, that happened. I'm going to go back to my journal and I'm going to enter account number 501. Okay. We move on to July the 3rd. We're looking only at purchases. On July the 3rd, we have a purchase of $3,300 debit. So we're going to add those together because debits are added. $2,800 plus $3,300. That'll give me $6,100 debit. Okay. And then I'm going to go back and I'm going to enter account number 501. Okay. We're going to jump over to July the 8th. July the 8th is Journal 16 and we've got a purchase of $2,900. Okay. So they're all debits, so that means that we're going to add them together. $6,100 plus $2,900. That gives me $9,000 debit. Okay. I'm going to go back and I'm going to enter account number 501 over here on my journal. Okay. So those are the 3 transactions that I have on page 16 of my journal. Now I'm going to go to page 17. Okay. Page 17, I've got an entry on July the 25th. This is Journal 17, and we've got a purchase of $26.50. Okay, so I've got $9,000 plus 2650, that's 11,650 debit. Okay. On the 25th, I'm going to go back and I'm going to enter account number 501. That's where I posted my transaction. We're going to go to July 26th. That is journal 17. And we have another debit of, on the 26th, of 2180. So we're going to go ahead and we're going to add the 11,650 plus 2180. That gives me 13,830. Okay, 13,830. Okay, we're going to go back and enter account 501. Okay, and then we have on the 29th, the last one, July the 29th, we've got journal 17, and I've got a purchase of 3560 debit. So we've got 13,830 plus 3560. That gives me 17,390. Okay. So that is the ending balance of purchases. That is how much money you spend on buying merchandise from the different suppliers or vendors, whatever you want to call them. Okay. 17,390 is what you purchased in merchandise during the month of July. Okay. So I'm going to go back here and I'm going to enter 501 over here. Okay, don't forget that step of entering the account number. I missed this one over here. Okay, so all of the ones highlighted should have an account number. Let me do a quick check. Yes, they do. Okay, so now we go to purchases, returns, and allowances. We're going to locate purchases, returns, and allowance, and we're going to do it a different color. We'll do blue. Okay, we've got 1, 2, and that's it. So we have 2 entries for purchases, returns, and allowance. Okay, so the first one is July the 5th. So July the 5th, we have on journal 16. Okay, and the amount is $300 credit. Okay, now let's look at purchases, returns, and allowances. Purchases, returns, and allowance. Okay, a debit increases, a credit decreases. Okay, well, that's for expenses. This is a contra expense account, so it will be the opposite. Okay, so my balance will always be a credit. So a credit, we'll add it, and then a debit, we will subtract it. Okay, so purchases, returns, and allowance, we've got a credit of 300. Okay. On the 5th, and this is account number 501.1. Okay, 501.1. Okay, and then we go down to the 15th, July the 15th. That is journal 16. We've got another credit of 350, so we're going to add them together. So 300 plus 350 gives me 650. That is the ending balance right there. And we're going to go over here. We're going to put 501.1. Okay. So for the purchases, returns, and allowances, we returned $650 worth of merchandise. Okay, those are the purchases, returns, and we need to keep track of the things that are being returned and the reason why they're being returned. Okay, so that takes care of that one. Now we have purchases, discounts. These are the discounts for paying within a certain time frame. Okay, so we've got purchases, discounts down here. Let's do a pink. Okay, purchase discounts, and we have another one over here. Purchase discounts, we have 3, and that is it. We have 3 purchases discounts. Okay, so let's go ahead and let's tackle them in order. We have the first one, July the 11th. Okay, this is on journal 16, and we have a credit of $50, and the same thing will go for purchase discounts. If we go back, purchase discounts is also a contra expense account, so it has the opposite balance of an expense account, which means that a credit will increase it and a debit will decrease it. Okay, so $50 credit, $50 credit. My account is 501.2. Okay. Okay. Then we have an entry on July the 13th. So July the 13th is journal 16, and we have another credit of $33. So because they're both credits, we're going to go ahead and we're going to add them. 50 plus 33, that takes me up to $83. Okay. Credit, and my account number is 501.2. And then my last transaction that I have is on July the 18th. This is on journal 17. This is page 17. And I've got a credit of $51. So we're going to go ahead and we're going to get the $83 plus the $51. That'll be a $134 credit. Okay. So that is my ending balance for my purchases discount. A credit of $134. And then we're going to put here 501.2. Okay. So all we are left with doing is my rent expense. Okay, that is the only account that I'm missing. That is on the very top. Okay, let's do a lime green over here. Okay, so we've got rent expense. We only have one item. Rent expense is an expense account. A debit increases and a credit decreases. Okay, so rent expense, debit increases, credit decreases. Okay. So we have the entry on July the 1st for $2,500. Okay. This is journal 16. We have a debit of $2,500. So my balance would be a debit of $2,500. Okay. So we are done tackling. Then I'm going to go back and remember rent expenses account number 521. We're going to put that over here. Now, before I move on, what I like to do is I like to make sure that my journal, all of the accounts have a post reference. Make sure that these numbers right here, they tie to the ledger accounts on your general ledgers. So what I like to do is I like to do a review and make sure that all of my accounts have an account number. That means that I have transferred my information over to the ledger. And in this case, we do. We did an amazing job. Good job. Okay. So we are done with the journal. We are done with the ledger. We've calculated the ending balance of each of the accounts that we worked with. Okay. Now we have to prepare an accounts payable ledger. Okay. Now we're going to focus on accounts payable down here. Okay. On my 8390, this red number over here, that is what we're focusing on right now. Okay. I have a credit balance of $8,390. Do I know who I owe money to? No, I do not. Okay, I just know that I owe $8,390. Okay, so I'm going to go over here and I'm going to unfill my journal because now I'm going to do more filling in. Okay, so what I'm going to do is I'm going to go and I'm going to look for any accounts or any transactions that deal with my accounts payable ledger for applied interior design. So you're going to look for anything that is accounts payable, applied interior design. So let's go locate, okay, accounts payable, Tilly's, Donna's, Shear, Donna's lamp. Okay, here we have an entry, an accounts payable for $2,650. Okay, so I only have one entry for applied interior, only one entry on July the 25th. Okay. So we're going to go and we're going to transfer that information to my applied interior design. We should have the name of the vendor and the address. All of the places that I've worked for before also assign a vendor number. Okay, every vendor has its own number. In this particular examples, they don't. I don't even have the address. That was not provided, so I left the address field blank. So we're just focusing on the actual name of the vendor, okay? Who are we buying stuff from? I am buying merchandise from Applied Interior Design. So when did we make this purchase? We made the purchase on July the 25th, okay? From Journal 17, am I getting this information? And it was a credit of $2,650. So the balance is $2,650, okay? So where am I locating that information? From down here, okay, credit of $2,650, okay, and we only had one transaction where we made one purchase from Applied Interior Design. Okay, so that is it. Let me go ahead and let me highlight I'm going to highlight these green. That way and let me highlight this one green. That way we know that we need to match them, okay? Now we're going to do the same thing and we're going to look for Donna's lamps. Okay, so we're going to go back to your journal and we're going to locate Donna's lamps. Here we have one for Donna's lamps. And then we have Donna's lamps down here. And then we have Donna's lamps right here. And maybe I should highlight them a different color so we can tell the different vendors. Okay, Donna's lamps, Donna's lamps. And do we have any more? Let me see. Donna's lamps, Tilly's, Donna's lamps. Here we have another Donna's lamps right there. Okay. So we are locating anything that has Donna's lamps, and we have 3 transactions affecting Donna's lamps. One on July the 8th, one on July the 15th, and one on July the 18th. Okay. We've got a credit, a debit, and a debit. So let's transfer that over to Donna's lamps. Okay. The first one we have is dated July the 8th. Okay. We have it on Journal 16 and we have a credit of $2,900. So my balance is $2,900 credit. So where did I get that from? From here, $2,900. Now I'm going to move on to the next one. On the 15th, I've got a debit of $350. Okay, so let's remember that information. And usually what I would do is I would print out my journal. That way I'm not toggling back and forth. Okay. This is happening on July the 15th. Okay, this is Journal 16. And we have a debit of $350. Okay, so I have a balance of $2,900 that I owe Donna's, and then I got a credit of $350. That means I still owe Donna $2,550. Okay, that is the balance owed to Donna's lamps. Okay, so that happened on the 15th. Okay. And then on the 18th, I have a debit of $2,550. Okay, so let's go back and let's put that debit on July the 18th. This is Journal 17 of $2,550. So I owed $2,550. Now I have a debit of $2,550. So that means that my balance for Donna's lamps is 0. Okay. I do not owe any money to Donna's lamps. Everything has been paid for. I made a purchase, I made a return, and I made a payment. That's what happened in those 3 transactions. Okay. Now we're going to locate information for Shear and Company. So we're going to locate information for Shear and Company. And I've got information here, Shear and Company. And then we have Shear and Company down here. And then we have Tilly's Shearing Company down here. So we have 3 transactions for Shear and Company. Okay, so we're going to tackle the first one. And we always tackle them in date order, okay, sequence. You know, we always go in date sequence. Okay, so we're going to start off with July the 3rd, a credit of $3,300. Okay, so July the 3rd. This is Journal 16. And we have a credit of $3,300. That is going to be my balance. And remember, the balance will always be a credit because this is a accounts payable. Accounts payable is a liability account with a normal balance of a credit. So look over here, liabilities always have a balance of a credit. Okay. So now we've done that one for July the 3rd. Then we're going to go and we're going to do July the 13th. We have a debit of $3,300. Okay. So July the 13th. This is Journal 16. We have a debit of $3,300. So at that point we owed nothing. Okay. And then we go back and we have one more transaction on the 29th, July 29th, and we've got a credit of $3,560. Okay. So we have one more transaction on July the 29th, Journal 17, and we've got a credit of $3,560, which is my ending balance. So that tells me that I owe Shear and Company, as of the end of July, I owe $3,560 to Shear and Company. Okay. Then last but not least, we've got Tilly's. Okay, so we're going to locate anything that has Tilly's on it. And we are going to figure out the balance owed to Tilly's. Okay, so you see, it's not difficult, it's just time consuming. Okay, So that's all it is, time consuming. But once you start doing it, I'm taking a little bit longer because I'm having to explain, go back and forth. But once you get on a roll, it should be very easy to do. Okay. So here we go. So we're going to enter the information for Tilly's. And we're going to start with the first one, which is July the 1st. Okay. So let's do July the 1st. Journal 16. And for Tilly's, we had a credit of 2,800. And that's going to be my balance, 2,800. So now we go and we locate the next entry. We have one on July the 5th. We have a debit of 300. Okay. So now we're going to go to July the 5th. Journal 16. We've got a debit of 300. So that means that my balance will be 2,800 minus 300. So at this point, as of July the 5th, I owe $2,500 to Tilly's. Okay, that happened on the 5th. Now on the 11th, I have a debit of $2,500. So let's put that debit there. Okay. July 11th. July's journal 16, and we have a debit of 2,500. So I used to owe 2,500, but then I made a payment of 2,500. So my balance goes down to 0. Okay, as of the 11th. And then I keep on going, and then I have on July the 26th a credit of 2,180. Okay. July 26th. Journal 17, and I've got a credit of 2,180. So that is my balance. Okay. Now this your accounts payable subsidiary ledger tells you the detail of how much we owe each of our vendors. Okay. Our general ledger only tells you all of the transactions, and it tells you that we owe a total of $8,390 to different vendors, right? But it does not tell you who we owe the money to. Okay, it just tells you the total. Now the subsidiary accounts payable ledger breaks down that number by the vendor, okay, by the supplier. Okay, who are we buying the merchandise from? From Applied Interior, from Donna's Lamps, from Shear & Company, from Tilly's Pillows. Okay, now if you add the total of your accounts payable subsidiary ledgers, these amounts need to tie to your accounts payable ledger of $8,390. So let's see if we did it right. Okay, for Applied Interior, we owe $2,650. For Donna's Lamps, we owe 0. For Shear & Company, we owe $35.60. And for Tilly's Pillows, we owe $2,180. And voila! That is a total of $8,390, which agrees with your accounts payable balance right there. Okay, so we are amazing. We did it perfect. Okay, now we are going to prepare. Okay, this is too much information for management. Okay, we must remember that managers are not accountants. Okay, if we are to give all of this information to your manager, he's probably not going to know how to read it. Sorry about that. What is this? Okay. What is this? Let me see if it'll let me. I don't know. Give me a second here. Okay, there we are. Let me see. Oh, there we are. Okay. So, if you give all of this information to your manager, remember he's not an accountant. He or she's not an accountant. They're going to be confused. Maybe they're not going to understand how to read it, what all of this means, right? So we want to simplify things for management. So we want to give management a schedule of accounts payable. Okay. Managers, this is how much we owe our different vendors. Okay, so what are we going to do? Something very simple, which is just basically copy the information of what is owed by vendor, right? If we don't owe anything to that vendor that month, we don't include them. So here we have the first one. We have Applied Interior Design. How much money do we owe them? We owe them $2,650. Donna's Lamps, we owe them 0. We're not going to include them. Okay. Shear & Company, we owe $35.60. Okay. And then we have Tilly's Pillows. So all we're doing is bringing in the balance from your accounts payable subsidiary ledger. For Tilly's, we owe $21.80. Okay. So that is what we owe. We're going to go ahead and we're going to get our total. Okay. We owe let me do that formula again. Why is it doing that? Okay, so we owe $8,390, and I'm going to proof that. Okay, so I'm going to bring in my balance of accounts payable on July the 31st. And my balance on my accounts payable is this number right here. This is your accounts payable ledger. We're going to pick up that ending balance, okay? And we have $83.90. So we're proving that those numbers equal, okay? And they do. So that means that my balance on my accounts payable ledger, which is $8,390, is comprised of my balance to these three different vendors, to Applied Interior, to Shearing Company, and to Tilly's Pillows. We are in balance. Remember, the total of what is owed to each of the vendors should tally up to your total for your accounts payable ledger, always. If it doesn't, then you made a mistake somewhere and we need to figure it out, okay? So that is all of the requirements for this problem. It is long. You're going to need a lot of practice in doing your journal entries fairly quickly. And then the biggest delay is transferring over your information to your ledgers. That is the biggest delay. And then, of course, calculating your ending balances for your accounts. Once you calculate that, the amount that you're going to be using for the rest of the problem is your accounts payable ledger balance. You're going to split that up by vendor. Okay, what do we owe to each one of them? And then the total of what we owe should tally up to our ending accounts payable general ledger. Okay, so we've done a lot. Journal entries, general ledgers, accounts payable subsidiary ledgers, and our schedule of accounts payable. Okay, it basically sums up the entire chapter in this problem. I hope that it is of use to you. Me going over in detail how to do each of the transactions, and then how it's transferred over to your general ledger, how it's transferred over to your subsidiary ledgers, and then finally how you prepare your schedule of accounts payable. Okay, please make sure to read the chapter before you attempt it. Organize your time. That way, if you have any questions or concerns, you reach out to me during my scheduled office hours. Okay, if you try to reach out to me during the weekend, I do not guarantee that I will respond. That is why I have office hours. I have 5 hours of office hours during the week. That is my time to make it available to you, so you can reach out to me with questions. Okay, so please try to work on your assignments during the week. That way, if you have questions, I can address them. Okay. A reminder, if you message me late Friday night, Saturday, or Sunday, your questions will probably not be answered till Monday. Okay, so take that into consideration. So that is basically it. Practice, practice, practice. The more you practice, the better that you're going to get at it. Okay, so that is it. Have a wonderful rest of your day, and until next time.